Hey everybody, it's Brian Shannon from alphatrends.net. Today is Thursday, the 31st of December 2020. The bell has rung and we closed at a new all-time high for the S&P 500. You would have never expected that back in February or March that we would be at all-time highs. That's why I always say only price pays. If you listen to the message of the market, it will reward you, and you are able to sidestep these big declines and be involved when the market tells you to. I'm not going to come up with some grand scheme plan for 2021. I'm going to continue to do what works well, and that is to follow price action and to cut losses. When the stocks move against us or I move to the sidelines, when they line back up, it's time to get back involved. And we closed again right at a new all-time high. Let's look at the numbers here. They're pretty astounding, actually. The SPY up 16%, Nasdaq 47%, led by those semiconductors, which are up 54%. Just amazing move. Those Biotechs 26%. Again, just some crazy numbers. Even the financials were up. Actually, they were down. They were up for the month, but down 4% year to date. The perpetual underperformers basically is what I like to call them. They've done nothing but underperform for the last 10 years. Let's take a look though at the action. Again, I don't have any grand scheme or plan or projection. I'm going to continue to take the market as it comes from my time frame, which is of course swing trades, which I define as anywhere from a couple days to 2-3 weeks. The S&P 500, again, it's a new all-time high. What we saw this past week was a test of the previous little volume-weighted average price from that prior peak. That is the level we were looking for. It bounced precisely from that level. And now going forward into next week, I think we have to look at the more important level in the near term is 371-ish, 370 and a half. Again, higher highs and higher lows. It's innocent until proven guilty. I don't have a lot more to say about it than that. The Nasdaq, same story. This is a closing high, I believe, for the Nasdaq. And even if it's not, it doesn't really matter. What's the difference? This 20-day moving average has been really phenomenal here the last couple pullbacks. Always keep an eye on that, as well as the key volume-weighted average price levels, and of course the direction of and where we are in relation to this 5-day moving average here on this 30-minute chart is what we're looking at right now. Let's talk a little bit about some of the cryptos as well. Let me just reframe that. This is let's start with Bitcoin, because Bitcoin monster year, and where it began the year back here in 2020. About 7,000, and here we are 4 times higher than that. Just an amazing move. If you've been following me on Twitter, you'll know that I became bullish right here on this particular day. Go back and look at the archives. I did get out of some but got back involved last week in the Ethereum. I had mentioned that on Twitter, that if you look at the 4-hour chart where I'd mentioned that was down here on this pullback into 634, and just amazing moves here. The fact is they're in phenomenal uptrends. My time frame is a little bit different with the cryptos. I do hold them a little bit longer, but I don't have a lot of money allocated towards them relative to what I do with equities. So the trend remains higher in those as well. So again, innocent until proven guilty, and I apologize. I didn't realize that I had not framed that properly. But anyways, the point remains the same. Innocent until proven guilty. Let's look at the Russell 2000. Great year for the Russell as well. Still in a phenomenal uptrend. We've had a couple days of weakness, and some people were talking about rotation out of this and that. That's nonsense. We've got a primary uptrend. It's a short-term pullback. So far, this pullback is fairly shallow. The one thing I would say going into next week and next year is we are below a declining 5-day moving average, and in order for buyers to regain control and confidence in the intermediate term, we want to see it back above that. But we have some encouraging signs that that's likely to happen. And I'm not looking for short sells. In fact, I don't look for longs. I don't look for shorts. I simply listen to the message of the market. And when the market tells me be cautious, as it was telling us in the semiconductors over here, I'd mentioned that over the last couple of weeks, it doesn't mean bearish. It means cautious. If it had broken below this 210.5 and stayed below it, then I think we had the chance that a good chance that we were going to come down to the 50-day moving average and the volume weighted average price from the October lows. Instead, what we're seeing is this market is still kind of in this range, 210.5 to 219.5, and it's most likely to break to the upside because consolidations tend to break in the direction of the primary trend. The primary trend, of course, is clearly higher here. So, I wouldn't buy a break above here. What I would prefer to do is see it break above, come down, test the 5-day moving average, make a higher low, and then continue to move higher. The Biotechs, if you've been following along, this is where I had suggested a stop and where we had gotten stopped out in alpha trends of our purchase from back when they started making a new highs over here. So the Biotechs are undergoing a little bit of distribution here. I don't view it as the end of a rally, not on the bigger picture, but in the intermediate term, clearly we have this little pattern of lower highs and lower lows, and that's the time frame that I trade. If you're an investor, I don't think you've got anything to worry about. We're still, above this prior band of resistance and pretty darn close to all-time highs in these biotechs. So, when you think about what you want to do different for next year, think about, they're not going to magically cure the virus. You're not going to become a better trader overnight. Just focus on the small things that you can repeat day in and day out, and consistency of process. If you listen to these videos, I've been doing them for the last 15 years, you'll know that I've been very consistent in my approach. My approach is we have a rising 5-day moving average within a primary uptrend. They're innocent until proven guilty. Again, these financials have been perpetual underperformers. They've finished lower for the year, whereas everything else pretty much finished positive. But they are behaving well now, so that's good for the overall health of the market. I think you've got nothing to worry about if you're involved in the financials, unless they were to get probably back down below 28 or so. That's going to do it for me. Happy New Year, everybody. Hope that 2020 was a good year and that 2021 is even better for you.